All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on September 21st, 2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's go ahead and get rolling. Somebody let me know in the chat. Everything is coming through loud and clear. What's up, Triple Dumps? Good to see you. Doing well. Hope you are also. September low, not yet in. I mean, I've been calling for us to revisit the lows, and momentum is to the downside, so wouldn't be surprised to see new lows. Obviously, that's what I'm expecting. Thought 75 was already priced in, possibly 100 will cause the dump. We were talking about this in the group earlier. It's basically just the difference between expectations and reality. You know, everybody expects 75 basis points. So we could say it's priced in, but in reality, once it hits and we get that 75 basis points, you know, that the reality like really sets in. It's sort of like the Ethereum merge. Everybody was like pumped up, excited for the Ethereum merge coming up. And then once the merge happens, it's like, oh, we're all excited for this event. And now the event has happened. And it's like, well, the thing that we expected to happen happened and nothing has changed. So why has Ethereum been dumping since then? You know, difference between expectations and reality. Nothing changed. What people expected to happen happened. But, you know, by the time it did, you see the results. So for me, I think a lot of it was, you know, last month for Jackson Hole, we didn't get a press conference. So Powell basically came out, spoke, he was short, he was calculated, and that was the end of it. Normally he speaks, everything sells off, it sounds hawkish, and then afterwards in the press conference, when he's answering questions, he kind of walks some stuff back or sounds a little bit dovish. You know, that's what people were expecting today. And it just didn't happen. They kept asking him questions, and he just kept saying the same thing over and over again. So, yeah, Eli says 0 days without an incident. Yeah, I almost used that thumbnail, honestly, but I was like, well, I'll have plenty of time to use that one. I might as well just use the Powell one in the meantime. All right, so let's take a look. So we'll get started here with TNX. So we saw TNX surge to new cycle highs, and then it did sell off throughout the day. As far as I'm concerned, this doesn't change anything. We're still very much inside the bullish control zone. We're still very, very much inside the bullish control zone. You know, the cross happened, but it's all the way up here at like 91. I'm not saying we can't see some kind of weakness in this over time, but I mean, let's be real. It just started rallying back up after a pretty aggressive pullback. Here we're coming up on the end of the week. I mean, we're at new cycle highs on the weekly. We have a hard buy signal, a bunch of green histograms, cross over the boost slope line. This thing looks like it's ready to rip. And you hear people now, you know, I've been saying it the whole way up. You hear people now talking about 4% Fed funds rate, and real soon they'll be talking about 4.5 and then 5, just like we said. And this is no longer, you can't deny this anymore either. Obviously, we're looking at the 10-year Treasury yields, but you can't deny it either because now the Fed funds rate has officially broken out past the previous high. So there's no denying it. There's no saying, oh, well, maybe, you know, it's just going to roll over, etc. It's done. It's official. We have broken out on the Fed funds rate of what amounts to like a 30 to 40-year downtrend. So at this point in time, the 2-year, the 10-year, all the different time frames are essentially confirming this breakout. We saw before the 2-year was way ahead. The 10-year has now officially started to surge to the upside. We still have 9 days left for this month. This is also the end of the third quarter. Very, very important rebalancing for the end of year. People that have underperformed will be seeking, you know, that yield for the last quarter to try to make up for it. People that have overperformed, either trying to squeeze out that last bit or just, you know, acting conservatively. We saw some very strong trends this year, and now there's no denying what will be the trend that dominates the future, and that is higher yields for longer. And we've heard Powell say it over and over again. We're in the bullish control zone on the Jewel Thief. We have all green histograms, blue slope line above the 0 line. And, you know, we are literally, I mean, days away from likely flipping the 200 simple bullish. So everything, as far as I'm concerned, extremely, extremely bullish for Treasury yields. So what does that mean? It means bonds are going to continue to get crushed. It means risk on assets are going to continue to get crushed. Let's look at the dollar. They've been calling for a top on the dollar the whole way up. And now here we are, just one more day of them being wrong. I mean, I'm sure they're used to it by now, but hard buy signal, bunch of green histograms, 8 and 21 still bull cross to the upside. I mean, we haven't even bear crossed 8 and 21. Why call for a top? Doesn't make any sense. When we go over to the weekly, I mean, look at that. Does this look like a topping candle right here? Or does it look like we're surging to the upside in a powerful, powerful bull trend? One of the most powerful bull trends. Hard buy, re-entering into the bullish control zone. 2 more green histograms in a row. Still blue slope line. 8 and 21 are bullishly postured. 200 just crossed over. 200 exponential over the 200 simple. This, ladies and gentlemen, is a parabolic uptrend. The only thing missing, the only thing that could possibly make this more bullish is if we were just at all-time highs. You know, blue sky breakout. But we know we have resistance up here at 120. So that's the area we're watching. They said it was going to top out at 80. Then it was 90. Then it was 100, 110. Now where's it going to top out? 114. And then they'll say 120. And then blah, 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 blah. The monthly chart right here. Bull cross, 200 exponential over the 200 simple, 821, bull cross to the upside, all green histograms, blue slope line, bullish control zone, Stoch still powerfully angled to the upside. There's 2 real areas to watch on this chart. The peak from 2001 at 120 and, you know, the all-time high at like 160. That's the main areas to watch. Obviously, there's a little chop on the way up a couple places, but nothing notable. Not like this. So we know the DXY is one of the best looking charts right now. TNX is one of the best looking charts right now. So sure, we could call for tops on DXY and TNX. Sure, maybe you'll get lucky. Maybe you'll pick the one day out of the last, 2 or 3 years that we get a peak. But I mean, it's pretty bad odds, honestly. So that being said, as long as these 2 charts are still powerfully, moving to the upside, it's going to be very, very difficult for any kind of sustained rally in any of our markets. So speaking of our markets, let's take a look. So U.S. oil, obviously WTI crude, breaking down. We're a little bit off the lows right here, but I mean, we're at the lows right now. So, I don't care if we're a couple dollars above it or a couple dollars below it. As far as I'm concerned, we're at the lows. There is a bunch of support, a whole cluster of support around this area. We have a slightly lower target for it. But as far as I'm concerned right now, this looks like a short to medium term pullback, potentially entering into a bear market on the daily time frame. Looks like we're going to see oil, energy in general, under pressure here. So the Dow Jones had a very, very bearish close. So obviously we saw a push down. We saw a push back up. Looked like we were going to close green. And in the last 20 minutes of the day, we saw aggressive selling coming in as essentially, in my opinion, the market realized hey, there's nobody coming to save us. Jerome Powell did not walk back any of his statements. There's no more Fed chairs coming out or governors coming out. There's no more, oh, maybe this is the pivot or maybe soon they're going to pivot or at least they're going to stop raising. He was very clear. He's like, yeah, another big rate hike. And, we expect more big rate hikes in the future. So does that sound like a pivot? Not to me. Not to me. So Dow Jones, at the lows. I mean, we're a couple dollars off the lows now. Less than 1% off of the cycle lows. So that whole entire move up, the whole move, the one that we capitalized on from the bottom and sold at the top, that whole move when everybody was up here and I was saying, remember, everybody's going to get the most bullish at the absolute top. Everybody's calling this a bull trend and it started back up and the rally's back on. Said, just wait and see when this V bottoms, when we give it all back and make new lows, what they're saying. And I mean, here we are, literally within 1% of new lows. And this is what has amounted to one of the stronger indexes this whole time. And just a reminder, we're not going to do this on every chart. when we look at this weekly, that weekly looks disgusting. I mean, we still have 2 days left in the week, but disgusting. Getting ready for a new cycle low on the weekly. 298 is our target, a double bottom potentially, at least some kind of bounce off the 200 simple. Still momentum to the downside, a clear rejection off of the slope line. This looks like it has further downside. Doesn't mean we don't get that bounce, but I think we're going to hit the 200 simple first. And in case we've forgotten what the monthly looks like, I mean, at this point in time, this is a confirmed bear cross on the monthly with follow through. Now, we still have 9 days left. Anything could happen, but Dow Jones would have to rally, 21 points. Doesn't seem likely. Momentum's all to the downside, bear cross. At new lows right now, if the monthly closed right now, we would be closing a new monthly cycle low. I mean, there's nothing bullish on these charts at all. SPY slightly off the lows. Again, I mean, just a couple dollars away though. No difference here. Same thing on the daily, the weekly, and the monthly basically as the Dow Jones. I expect a slightly lower low on the weekly, 358. And then when we look at the monthly, at this point in time, we're at the cycle lows for a monthly close. We're very, very close to confirming that bear cross. And we know, that's going to lead us down to some of these other key levels that we've been watching. I mean, for the Dow and the SPY, it's not crazy to think that we could have 15 to 20% down moves from where we're at and then reevaluate from there. Triple Qs slightly off the lows, but again, just a couple percent, a couple dollars away, looking very, very bearish, very clear rejection, high, low, lower high, lower low, lower high, likely to make a new lower low. No one that understands technical analysis or has participated in markets for anything more than a year or two could look at this chart and see anything bullish. It's literally not possible. There's nothing here. And that's all the major indices. That's 95% of the stock markets, let alone U.S. stock market. Looks like we're likely coming down here for that double bottom retest of the 200 simple, at which point in time we can see momentum all to the downside and just building. Looks very, very weak. And we know obviously the monthly has already confirmed the cross to the downside. Would need to rally all the way back up above 317. Basically like 30 something points. More likely headed to like 219, which would be about a 20% downside move. Momentum just powerfully angled to the downside. Russell, again, clear rejection. A little more off the lows here. The Russell is holding up better shorter term. Now, it's underperformed for a long time when it consolidated, and then it was pretty bad on the way down. But now it's had a nice move up, and it's just consolidating at that mid-range. It won't be long before it makes new lows, especially if everything else does. So, I mean, it could be by the end of the week. Who knows? So SMH, semiconductors, just off the lows right here. Again, very key indicator right here for what's happening in the broader economy. Semiconductor demand has fallen through the roof. Gluts in the economy left and right. So XLE, energy rolling back over the 821 bear cross, coming back down to the 200 exponential and simple. 200 simple is on top, telling us we're running out of momentum to the upside. So while there's still potential for a new higher high, likely at some point in time in the very near future, this is going to roll over and really test the bear market. And that is likely going to be a push down to the lows and then a back test of the 200s. So we're still above them for now. Short term, looks like we're coming down to 73. After that, I would expect a retest of the lows. XLU, utility's been holding up real nicely. We see we got the bear cross on the daily. We're headed down to retest the 200 exponential and simple. We have quite a bit of resistance. We would expect to act as support right around like 71, 71.50. We'll see what happens when we get there. We had clear bearish divergence, and the bearish divergence has led to an immediate dump down there. Still holding up better than most though. XLP, consumer staples, lost key support right here, confirmed into the bear market, back tested those key levels. Looks like it's coming down here to about 68 in the near future. XTN, transportation, already revisiting the lows, getting ready to break down to new lows. We have much, much lower targets. There is quite a bit of support here, as that was the pre-Rona high. That was the 382 macro fib, the 236, or the 382 low to high fib, and the macro 236. If we lose this level, we're talking about a quick 10% drop. Seems very likely at this point in time. None of these markets looking particularly good. FedEx sold off, had a little bounce here. back testing that resistance, looks ready to go lower. I'm sorry, support rather. There is a decent long-term support line right here, but we know on the daily it's been violated like really, really deeply in the past. So, I mean, we could have a ridiculous sell-off past that. It's just more about if it holds up on like our monthly charts. But again, we've been targeting this level on FedEx down here at, roughly 100, 170. 107 to 117 was our target for a long time here. And, it seemed kind of crazy when we were up here at 229, but now at 153 seems a lot more likely. So, nothing crazy here. Just a regular old broadening wedge. Test the top of the range, test the bottom of the range. The range just gets bigger and bigger until eventually it breaks. Which way does it break? Well, we'll have to see, but it doesn't look good right now. All right, let's look at the big boys, and then we'll jump into some crypto. So obviously we already took a look at the DXY, probably one of the strongest charts out there. So Apple still oscillating in this range, lower highs and lower lows, but we have a descending broadening wedge. So it's a broadening wedge, but it has a slight negative slope to it. We do still have that short position open on Apple, broke down below the 200 exponential and simple, back testing them now, likely coming down here to our 140 target. After that, we'll take some of our profits right here. We'll look for, reaction, what kind of rally, and then we'll look for our completion of the trade down at 115 eventually in time. Obviously, Apple's been holding up very well. I would expect it to continue holding up right up until it doesn't. Same with Tesla. Tesla holding up right around that $300 level. Obviously, clear support above the 200 exponential and simple. Near the top of the range. Could easily have a push up here. Another 10 to 12% upside. But I do expect it to come down here to the downside eventually. Target on Tesla 178 short to midterm. Sounds crazy, but again, we already retested the 236, the green one. The blue one is next, and that is 178. We saw clear support at the 236 in green. So let's say we do sell off down here, and we don't see any support at the blue 236. No one's looking at that level. Green 382 is at 138. Sounds crazy right now, but again, once Tesla gets halved, when it's at 150, 138 is not going to sound crazy. Does it have to happen? No, I could be wrong. Seems likely, though. That's what everything else is doing. Microsoft obviously peaked. Series of lower highs and lower lows. No denying what's going on here. We see it in real time. This one is leading the market. We have a high, a low, a lower high, a lower low, another lower high. What do we expect after that next lower high and the clear rejection of the 200s? AKA, this is confirmation of the flip from a bull market when it's all blue to a bear market where it's all red. And then after that rejection, after the confirmation of the bear market, what happens next? Well, we just put in a lower high, so now we go put in a lower low, which we just did. So for all the charts that haven't put in that lower low yet, this is what they're going to look like very, very soon. Microsoft led on the way up, very strong stock, very powerful stock. Not looking so good right now. And obviously we have those key levels to watch out for. Our fibs on the way up. This is clear support. As of now, seems likely we're headed to the 0.5. 215 on Microsoft. I will be a buyer. We have some trade setups. Talk about those when the time arises. Next we see Google. Again, the same thing. Not quite as clear cut, but we see a series of lower highs and lower lows. We see clearly what was a bull market. We see all this beautiful blue and green flipping into a bear market. All of this pink and red. Undeniable rejection off of the 200 exponential, followed by lower lows. A high, a low, a lower high, a lower low, a lower high. You could argue this was the high right here. It is what it is, but you get the point. We're trending to the downside. We're confirming into a bear market. And Google, as much as I love them and appreciate this great, amazing platform that definitely doesn't, censor or, shadow ban people for saying things they don't like. We talked about Google a long time ago, getting back down to this level. We have a small gap right here. It's nothing crazy. But, it seems very likely that the next step down just takes us down to like 96. Once we break that 100 threshold, we start looking at these key fibs. As soon as this breaks, the move is to the 0.5. We're already at the 382. So 87.35 seems likely. And then if we do get an equal leg down, for what amounts to like an ABC correction, seems likely we're at like 76. Again, I'll be looking for buying opportunities around those levels based on momentum, divergence, support, retest, higher lows, moving averages, etc. But that's where things start to look juicy. Now, if this downturn lasts a year, 2 years, 5 years, 10 years, that might change when we get down there. But, we don't want to just say, hey, this is our target, and then it gets there, we don't do anything. likely other people are looking at a target. So we'll look for at least a scalp. And then a lot of times those scalps will turn into long-term positions. So NVIDIA, new lows, clear rejection. Again, a big leader on the way up. We have a cluster of support all through this area. When and if we lose this area, obviously we have our fib down here at 104, $100, a strong support level. That's the scalp we're looking for when we do get there. Next we have Meta, new lows, just getting absolutely destroyed. Finding support at that key level from 2020. Very close to retesting the 2018 lows. And hear that again. We're talking about we're at the Rona dump levels. Meta, when it dumped, if you bought the absolute bottom during the Rona sell-off, the absolute bottom, you're break even right now. We just walked back that whole move. All the money, all the credit, all the stay at home, all the pull forward demand, all of that, and it's all gone now. And this stock is worth the same amount once again as the absolute bottom from the Rona dump. And we're almost at the absolute bottom from 2018. That's our target down here. Obviously that lines up with our macro 382 as well. 122. Now is that going to be the bottom? No. Meta probably goes to 0. But there might be some opportunity along the way. So Amazon is next. So Amazon's been holding up pretty nicely. It did come back down, kind of filling out this little area right here. It does seem likely it's headed down to the lows again. Still 118. The lows were 102, roughly. So it could still have, another 12 to 15% downside just to get to the new lows. And, Amazon's not exactly been strong. It's been consolidating this range for a long time. Very clearly in a bear market. Very clearly was just a reaction rally off of the split. And the truth is, there is a big cluster of support where we bounced at 102. But arguably what was resistance at the top versus what was support near the bottom, we could be talking about like $67 without breaking through that cluster. And I know it sounds crazy, but essentially what is that? Well, all it really is basically just this, area right here. And the difference being, what is the top, the resistance, act as support? Well, it did already and saved us once, but now clearly we're getting rejected, putting in a lower high. So if we come back down to it again and we break inside that level, then, what was support near the bottom, somewhere, depending on how you're looking at this, anywhere in this big green box here could act as support next. Probably something like that. And then, once we come down to the bottom of that area, 81, then we bounce around for a little bit. If that doesn't hold, then we look at the next support down here, probably somewhere around like that 67. So that's what we're looking at. Obviously once we bounce a little bit off a support area, push up, we put in a lower high. If we come back down to that same level again, it's just a matter of time before we eat through those buy orders and then we break down to the next level. So, looking at these big players, looking at the, a lot of the market movers, obviously Tesla's holding up okay. Apple's been holding up okay. And that has been helping the major indices stay okay. But a lot of other stuff is looking a lot worse if you really zoom in and take a look at those. What's going on, Calma Betty? Good to see you. What's up with you? I do love that 0 days without an incident. I'm glad we started that. That's fucking beautiful. Okay, so let's look at Bitcoin on the daily. So obviously disgusting price action on Bitcoin. We'll go down to the 4 hour and look at that in a second. But again, we closed a lowest low of the cycle close right here on September 22nd. We had that quick little run up, didn't hold it at all. And then again, we just closed a new cycle low. We wicked down here, depending on the exchange, to about 18,000. Previously, we had wicked down to about 17,659. So, we were about $300 to $500 off of the wick low, but we put in a new daily low close. So if we're closing new lows below the 200 exponential and simple in a clear bear market, I just expect us to continue closing lower lows. So we had a nice little rally at the end of the day, but what was it really? This was a nice rally. Everybody thought we were going to turn around. Massive bearish engulfing candle. Let's go to the 4 hour. This was like leading up to and then at the meeting. Matter of fact, we can even go down a little shorter time frame. We shot up leading up to the meeting. It was a pretty aggressive rally. At one point in time, I can't remember exactly what it was. At one point in time, we were up, 3.6%. We pushed all the way up, and then we sold off from that peak all the way down to this wick right here, 6% down. So we shot up, we sold all the way down, it got bought all the way back up, and we closed slightly bearish, and then it sold straight off again. And then obviously we just came down here and closed lower lows. Pretty aggressive price action in a short period of time. So, you know, what does that look like to me? It looks like a stop hunt, basically. You know, there was clear, people would have had stop losses right here if we put in a higher high than this recent high, took them out. And then, of course, people would have had lower stops either here or here. So obviously when they wick down, they take out that stop right there. So they took out the stops to the upside right here, took out the stops to the downside right here, and then price action closed in the exact same spot again, followed by continuation downselling. So in my opinion, that was full-on liquidity grab by market makers, just stopping people out of position so they have to rebuy. So new lows on the daily, hard sell signal, well below the 200 exponential and simple, all red, all trending to the downside, all red histograms, red slope line, below the zero line. Everything is bullish on the daily. Everything is, bearish. Everything is bearish on the daily. There's absolutely nothing here that we can look at and say is bullish. And we know now at this point in time, we're, you know, a few days left on the weekly, obviously. We have the full weekend. This is Bitcoin spot chart. We broke down below 200 exponential, lost the slope line, below the 200 simple, back tested them, failed to reclaim them as support, got smacked down like the little bitch that Bitcoin is. And now here we are at the bottom of the range, just hanging out. Just a matter of time before we put in new lows. We're obviously doing it right now. Again, we're a couple $100 off the wick low from this aggressive selling. So if we're just consolidating at the lows after what amounts to, you know, a few months hanging out at this level, I mean, we're just getting ready to take our next leg down. And you guys know, obviously, the next leg down will be this wick right here and our cluster of support from 2017. 14K is right around the corner at this point in time. Could we overshoot and go straight to 10K? Yeah, it's possible. Could we undershoot and stop at 16K? Definitely. I think it's worth paying attention to key levels, looking at short-term divergence, but knowing that if you try to pick the bottom, if you try to catch a knife, chances are you're going to get cut. I mean, that's all there is to it. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. The blue stochastic looks like it is going to come down here and retest the pink. Could it bounce there? Could we get another retest to the upside? It's possible, but we had a nice retest, retested support, retested resistance, another lower high, came back down to support. Doesn't look good right now. Looks ready to roll over. We've had a lot of opportunity to move to the upside, and all we did was go sideways to down. And then when we look at the monthly, again, if we close right now, it would be the lowest monthly close. The 821 have a bear cross. We're in the bearish control zone. All red histograms, red slope line below the zero line. Everything bearish. We don't have a 200 monthly moving average. That would be our one bullish saving grace. But we don't have one. So instead, Bitcoin looks like trash. And obviously, you know what? We haven't really talked about what's going on here. We've been trading inside this channel. You know, arguably a wedge, a triangle, whatever. But the fact of the matter is, you know, we're breaking down from this channel now. And you guys know we've had this count set up in play for a while now. 1 down, 2 retracement, 3 down, 4 retracement. And then once we take out the 3 down, which we're basically doing right now, we just see the continuation of the 5. And you guys know, obviously, my 5 target for this move is theoretically somewhere in between. Well, we'll see. We have an initial target at like 14K, somewhere around there. And then we have another cluster around 10K. And then we have another macro target down here at like 6K. So before we get crazy and people are like, oh, they're calling for 6K. You're stupid, unsubscribed. I hate you. Bye. But I'm still going to watch, see what you say. Before that all happens, you know, we remember it's slinky theory. So we just continue to put in a high, then a low, then a lower high, then a lower low, then a lower high, then a lower low. So the next lower low might be at 16K. Then we might push back up again. Then we might push to 14K. Then we might push back up again. Then 10. Then back up. Then 6. We don't know exactly how it's going to play out. I suspect what's going to happen is we're going to get the ABC down, the ABC up, and then the 1, 2, 3, 4, 5 down. And then after that, markets are going to assume that the correction is over, whether that's from 14K or 10K, I don't know. At which point in time, we should get a push back up somewhere around 30K. And then if I'm correct, if my macro continues to play out perfectly, which it has been for, I mean, at this point in time, years, if I'm correct, then likely after that, we push all the way back down and we put in, you know, a 6K or some ridiculously low, you know, and don't put in a new high for an entire 4-year cycle, which at that point in time, Bitcoin will officially be dead. Not really though. I think after that it goes to new highs, but people will say, oh, it's never not put in a new high in a 4-year cycle. It has to be dead. And then, you know, that provides the best buying opportunity for our lifetime. What's up, Parag? Good to see you. Love the community. Yeah, you too, man. Always love you guys, man. Always positivity, always eagerness to learn and share. You guys provide plenty of value to each other and to me as well. You know, and obviously I'm here to do the same. So, Calma Betty says, Bitcoin to 9K or lower? Yeah, I mean, I think probably we stop at 14K short term. But I think when we go to 10K, you know, we'll either front run 10K and it'll run at like 10.6 or something like that. It'll get bought up, or we'll overshoot it and it'll drop to like, you know, 9,200 or something insane. But I do think we'll get a very powerful move from 14K, probably from 16K, and then again at 10K. So plenty of scalps along the way. Obviously there'll be counter trend, but so Ethereum has been just straight up melting down. No surprise. We talked about the bear cross right here, the 821 backtest confirmation. We've been talking about how Ethereum basically has the furthest to fall because it had such a nice rally, almost up to 200 exponentials and simples. Even the stock market, most stocks are down here at or near the lows. Ethereum is still well off of the lows. But when we zoom out here, we see actually, you know, a lot of people are saying that the 5-wave structure didn't play out right here because they had the 1, the 2, the 3, and then had this as a 4, and we're expecting us to come up for a 5. But in all actuality, I have the 5 waves right here mapped out, and then we have the 1 down, the 2 up, the 3 down, the 4 up, which backtested the 1 but didn't violate it, telling us this is still a valid 5-wave Elliott wave structure to the downside. And now we're breaking down here, likely to a new low. So, you know, from where we're at to our target, we're still talking about a pretty juicy move down, you know, on Ethereum, somewhere from 47 to 57%, somewhere around like 525 to 650, you know, and then at that point in time, again, we'll look at that and say, okay, that may be the macro low of the cycle, or maybe we're going much, much lower, depending on what Bitcoin's doing, depending on what the world's doing. But in the meantime, you know, that is our target. We have already hit the 382 confirm, and that would be our 0.5 is the top of the range. The bottom of the range is just a projected target. And then obviously we have the 618 as well. And if you didn't look at the Ethereum deep dive video, we talked about the difference between basically saying, F it, I'm just going to buy right here because I think Ethereum's going to 20K, versus waiting for this move to play out and then buying down here close to 650. And then what the difference is if, you know, Ethereum does go to 20K. And the difference was massive. If you would have just bought then, it would have been a 1,200%, 1,200%, or like a 12x. If you waited and bought down at the dip, like we were talking about, you know, not just hodling and just looking the other way, we're talking about 2,985%, or a 30x. So the difference between buying right here, where we were a few days ago, and buying down here, where I anticipate we're headed, is the difference between 12xing your money if we run to 20K, or 30xing your money if we run to 20K after we first go to 500. And that's the difference between, you know, trading and just hodling. So definitely some massive, massive potential here. Short term though, you know, looks to me like we basically put in a head and shoulders, broke down from the neckline, and now we're just putting the move out. And this is the initial back test of the channel we went sideways in. Remember, we were buying the bottom support right here. Normally we were selling the top of the channel, but here we didn't because it looked like we were going to break out. We took a little profits early right here, moved into some altcoins. You know, we've been pretty dynamic in this market, but let's be real. I mean, we have been abusing the market, taking full advantage of it. We had some really nice trades on Ethereum over the last like 2 months, decent trades on some other cryptos as well, phenomenal trades on some of the uranium stocks. There's been a lot of opportunity, you know, and a lot more coming, obviously, especially as people shift for the end of the quarter. But Ethereum looking rough, looking very, very rough. Even if we look at the longer time frames, the weekly, it's still holding up at the 200 simple, but looks likely to hit the lows. Very, very weak on the weekly. I mean, it looks better than most cryptos, but, and then the monthly, again, just slightly off the lows. You know, you can look at the daily or the weekly or whatever and say, oh, you know, it's not that bad. When you look at the monthly, I mean, it's pretty clear what's going on here. You know, we crossed the 821 to the downside. We're coming down here to revisit the lows. And then the real question is just how low are we going? Are we going to 400? Are we going to 600, 500, 200? You know, we don't know, obviously. You know, I mean, I could see a world where Ethereum's at $200 again and everybody hates it. It gets delisted from a bunch of exchanges because the SEC comes out and says it's actually a security. I mean, I could totally see that. I mean, if you're an exchange in the United States and you have Ethereum listed and the SEC comes out and says, hey, this is an unregistered security, you don't have a choice. You will delist Ethereum. So, I mean, what does that do to the price? Crushes it. And I'm just picking Ethereum. Like, there's another 19,000 cryptos that will get delisted as well, you know, if they go that route. And then obviously, in my opinion, I made statements about it ahead of time, but, you know, the truth is going from proof of work to proof of stake, you know, gets rid of the whole decentralized argument. And, you know, it really takes away from the whole, like, you know, nobody else is doing work that promises potential for, you know, gains in the future. I don't know. I just don't see how that was a good decision at all. All the years Ethereum's been fucking off. And you know the SEC is up their ass, ready to go. And then you're going to switch to proof of work. I'm sorry, stake instead of proof of work. You're just asking for it. Just asking for it, in my opinion. ETH Bitcoin ratio clearly topping out here at resistance. We'll see what happens. Pretty aggressive sell-off. Massive support down here on this ascending channel. So when it gets down to the bottom of the range around 0.06 ETH to 1 Bitcoin, or the other way around, 0.06. No, ETH to 1 Bitcoin, yeah. You know, that's where we would expect to find some temporary support. It could easily break down here to the 0.055 level and retest 200 exponential. We did it once already. Not crazy to think we're headed down to 200 simple. 0.043. That's the delist. Maybe Bitcoin's still going down, but Ethereum just gets destroyed compared to Bitcoin. Because, you know, obviously it's trash. Obviously. I mean, according to the charts. It's not my opinion. It's actual facts. So weekly crypto total market cap looks like straight up trash. Revisiting the cycle lows. You wish it was visiting the cycle highs. Yeah, wasn't that long ago. Crypto was worth 3 trillion. Now it's worth 860 billion. That is a trash asset right there. Asset class. And you guys know I love crypto. But boy, do they look like shit. So this is a weekly chart below 200 simple. Very close to flipping bearish. Disgusting chart right here. Bitcoin dominance chart. Straight up trash. At the lows right here. Trying to bounce. I went into and did a deep dive about the difference between the regular Bitcoin dominance chart and the Bitcoin dominance chart minus altcoins. And the importance of that. As I suspect that many people are speculating on the US dollar using pegged stablecoins. Therefore, a lot of money in crypto is actually just speculating in dollars for people that live outside the United States. So let's say for instance you live in Turkey and inflation's like through the roof and you get paid, you can immediately take that money, convert it from Turkish lira into US dollars, and then you don't have to worry about the 70, 80, 100% inflation rate because you're locked in at dollars. So as they strengthen, you can convert them back into your currency and you get a ton more than when you put them in. So you're essentially arbing the dollar strength. Meanwhile, you know, it looks like you're speculating in crypto. It looks like you're keeping your money in stable coins ready to deploy back into crypto. You may have no interest at all in Bitcoin or Ethereum or any of the other, you know, tokenized assets, securities, you know, whatever. You may literally just be using it as a method to speculate in US dollars. And I think that's huge as we see a record bull run in the US dollar like we haven't seen in, you know, decades. Makes sense that a lot of people would be actually in stable coins speculating on US dollars, not speculating on actual cryptocurrencies. So gold at the lows just looks absolutely atrocious right now. Below 1700, 1661. We've been talking about this level for some time. You guys know I'm very bearish on gold here. We broke down from key support. Now, is it possible that we get what is referred to as spring, where we break down and then immediately find support, reclaim this level, and just skyrocket to the moon? It is. It's definitely possible. It is definitely always a possibility that you break support or break resistance and then immediately reverse from that. And it shakes a lot of people out, hits their stop losses, says, okay, we're going lower, stop me out, and then I'll re-enter lower, and then immediately we shoot up, and then they have to use that momentum buying back in to the strength, and then that propels us out of a range. It happens very often, a fake break to the downside or a fake break to the upside, followed by a strong reversal. It's possible. Right now, though, doesn't seem likely to me. We're consolidating below support. Looks like we're getting ready to break down to like 1600. So that is our next fib. All the momentum on short, medium, and long term is just not good right now for gold. Not good, in my opinion. And then silver, it's been holding up better lately since this like last couple week rally off the lows. But again, very, very weak. Very, very weak. Putting in some bullish divergence. Could it shoot up here to $21.50? It's possible. I don't think it's going to rally big without gold. Even though obviously we see the gold-silver ratio chart. We did break down past that low. We talked about how that's not that important because we put in a high since then. So now we put in a low. So once we come back up eventually and put in a lower high, then a lower low, then it looks like we're in a downtrend short term after a nice uptrend. But the truth is, this is just a back test of the 200 exponential and simple. As long as we're above them, all that happens is the 200 exponential just gets closer and closer to crossing. And then eventually when it does cross, it ignites the bull trend on a weekly chart. So, I think probably gold is going to new highs compared to silver. GDXJ, gold junior miners. So we talked about this long trend, this massive descending channel we have been in since August of 2020. So 2 years we've been in this trend. We're at the very bottom of the trend. We're at some key support levels, some key fibs from our all-time low back in 2016 to our all-time high, cycle high in 2020. We have sold off to the 618. We're at the bottom of the channel. This seems like a probable area we would find support. Now, if we don't find support, we break down from this level, we'd likely get the measure move substantially lower. We're at 2850 now. We'd likely go to 25 or maybe 23. But top of the range, just staying inside the range, nothing breaks. We just keep bouncing. Talking about 26% upside from where we're at right now with 5% stop loss. 5-to-1 risk reward ratio. So the only problem is all the gold and silver people, all the people trying to get you in miners, they've been trying to get you in this whole entire way. None of them have any money left. They're all broke and locked into positions at a substantial loss. So what convinces all of us, the smart people, or people that were just not into gold or silver or miners or whatever, to suddenly get interested in them? I almost feel like it's a self-fulfilling prophecy. Like gold, silver miners need gold or silver to rally. And in order for people to get interested in gold or silver, it has to rally first. So it's sort of like a double-edged sword. It's like you're damned if you do, you're damned if you don't. You have all this momentum to the downside. So until you can get momentum to the upside, you're not going to get any extra interest. And you have all this interest that's been building the whole way down, but now you can't get any new interest because all it does is go down. So, are we close to eventually running out of sellers and putting in an actual bottom? Maybe. The only problem is the gold and silver, especially juniors, but miners in general, look like they could have a rally, like they're ready to go. But the problem is the underlying assets look terrible. So like if gold and silver have been getting beat up over the last couple of years, gold and silver miners have been getting absolutely just crushed and decimated over the last couple of years. So all of a sudden, I don't just expect gold and silver miners to like rally super strong without gold and silver. So the gold and silver charts look terrible. So even if the gold and silver miner chart looks good, it's tough to take a position because the underlying looks terrible. So one of them's lying to us. We don't know which one, obviously, but one of them's lying to us. Silver juniors at or around the lows. GSG, commodity index, again, retesting the lows. Really looks like essentially a channel or just sideways consolidation at support. We know the longer we spend bouncing on support, eventually the ice breaks and we fall through. So is this thing about to get a bloody waterfall? I mean, honestly, guys, it really looks like it. So what does that mean? Commodities we know are selling off. Energy is like kind of selling off, but some is still strong. So what would cause this big breakdown? Well, just loss of support and just loss of demand. Likely we break down to like $20 after that, somewhere around like that 18 level. Seems like a good probability right now. We're definitely seeing weakness on this. It's one of the few assets that's still above the 200 exponential and simple that hasn't confirmed into the bear market at least once, and then back tested. So, this tells us basically, hey, the energy trade is pretty wore out and the commodity trade is definitely worn out, likely. So FCG, First Trust Natural Gas ETF. So just like American Nat Gas Producer, we got a high, we got a low, we got a lower high. It was almost perfect to the T at our 786. That's our A, that's our B, our back test of the ascending channel. It looks like we're coming down here to touch the 200 exponential and simple, and then likely revisit the lows. And then you guys know, obviously, we have a target down here for our retest of 236. We didn't quite get there here. So actually, it's technically our first test around 19. And then after that, we have key support at like 1573 and a macro target around 1385, something like that. We'll see how it works out. Obviously starting to see some weakness now. This was holding up much better than oil initially, and now we're seeing it starting to roll over. So CCJ, Cameco, uranium producer, very strong compared to the rest of the uranium stocks. We did sell up here at the 786. It had a nice little push up here, and now it looks like we're getting ready to cross the daily to the downside. Seems likely to test like this $24 range. I don't know how great of an opportunity we're going to get to buy CCJ. If it just holds up like this, I'm more likely to take advantage of one of the other more speculative stocks because it's just holding up extremely well. Extremely well. I mean, I definitely want to be positioned there if I was just going to hold through a bear market. But if uranium goes into a bear market, if nuclear goes into a bear market, I'm not just going to hold and take losses in the strongest loser. I'll move to sides or take advantage of the move down. So we're not stuck in a position where we have to just sit in the best loser, which is a great advantage, obviously, and we should all take advantage of it. But here on URA, we got a much clearer picture. High, low, lower high, lower low, lower high. Seems likely we're headed down for a lower low. Very clearly confirming into the bear market, trying to save it. After that fails, new lows, continuation of the downtrend, confirmation of the bear market. You guys know we have much lower targets, but the first retest right around the $18 level. Quadruple U's, again, high, low, lower high, lower low, lower high, confirmation of the bear market, rejection, likely coming down here to revisit the lows, 475. More likely than not, we actually test these lows back here at about 446. We've got key fib levels and everything to pay attention to as we get there. We're talking about like 30+% downside here. UROY, same thing. Took advantage of a couple scalps on the way up here, but a high, low, lower high, lower low, lower high, confirmation of the bear market, likely headed down here to revisit the lows. You guys know that means $2. We're at $2.50 right now. Another 20+% downside. After that, this thing could really fall off a cliff. CCJ, Cameco, Canopy. I think I said CCJ. I meant CGC, Canopy Growth. So it's been holding up better than most of hot stocks. We did get the 821 bear cross. We're still a decent amount off the lows, but it seems like it's going there. I mean, we're at 290 right now, and the lows are 216. Seems like it's going there. Tilray breaking down to new lows. That was beautiful. We've been waiting for that to happen. Very nice. So now we have new cycle lows right here, or new lows right here, but we still have a macro lowest low, slightly below. So about 50 cents lower. Once we hit that, once we break through that, everyone that ever bought Tilray will be a loser, and that's when I'll be interested in it. Once I know that everyone that's ever purchased before me is a loser, I'll probably take a position. We'll see where that's from, though. I mean, it could get nasty. When you break to new lows, it can get nasty. ACB broke down from that key support in blue, confirmed the 821 cross, came down here, revisited the lows with a wick, had a tiny bit of support. Earnings came in basically flat. Oh, maybe not. I swore I looked at this and it was flat. Oh, you know what? It was probably for a different one. Sorry. Earnings came in for ACB. We've been talking about how bad shape the books look like on this. And the earnings came in at, the estimate was a 13-cent loss, and it came in at a $2 loss, which is a 1,400% surprise. So not good. And then for reported revenue versus the estimate, it was basically flat. It was 39 million versus 38.99 reported. So yeah, that's horrendous. So they lost a lot of money. A lot. I mean, they were expected to lose money, but they lost a lot more than anybody even thought. And I mean, this wick down here, keep in mind, this is like the lowest lows. We wick down here to the lowest lows ever. So again, this, if we're a blue sky breakout, to the upside, well, when we put in new lows, I mean, that's full on free fall. So this is in free fall. I mean, the pot stock industry as a whole is just absolutely wrecked right now. It's hard to argue there won't be some value for anything purchased now, 5 years from now. But I mean, who knows? They could still have another 50% downside before then. No reason to just buy into them when they're continually getting wrecked and then just hodl. Or dollar cost average down. No fucking thank you. No thank you. Next we have Chili's. So we talked about that resistance up here. It started looking like it was going to push out. It did open a candle and then it closed back below it again. Looks like a rejection, back testing it again. We still have this ascending channel support right here. As long as that's holding up, it's okay. But you guys know, I said the real trades to the downside. 29% stop loss. Obviously, you wouldn't want to rock that out. 68% downside. It is a, well, if it was correctly using the right tool on here, it's like 2-to-1 to the downside. I mean, arguably this thing is confirming into a daily bull market right here, but let's be real. If Bitcoin just rolls over, Chili's is just going to immediately go straight to zero. Well, it'll probably stop at 8 cents, but yeah, it looks rough. This looks like we're setting up for an epic rejection right here. The slope line flipped back over blue. We're below it and running out of steam. That is usually the very, very reliable, very, very beautiful rejection. So we'll see what happens with that one. But yeah, so I think we made pretty good time right there. 52 fucking minutes. Let's go. All right. Well, that's all I had on the agenda for today. So I guess we'll go ahead and wrap it up right there. Since we made pretty good time there. Calm with Betty says the macro situation is trash. Yeah, I think people are just starting to realize it. I mean, I think that's what the conference today, as we're like listening to it, you could hear the reporters asking questions, just hoping to ask the right question to just get Powell to say anything other than, we're just going to fight inflation. It's not going to go away anytime soon. We're not done cutting rates. Once we do decide to slow down cutting rates, we're going to be data dependent and we're going to stay at super high rates for a super long period of time. I mean, he basically just said the same thing again. And he even said nothing has changed since Jackson Hole. In my opinion, Powell is doing, now granted, you guys know I hate the Federal Reserve. I think they're complete trash. They fucking suck. And I hope they, I wish they never existed. And I hope they get abolished in the near future. All central banks, I mean, are just total trash and I hate them. But that being said, as much as you can hate someone or something that you don't really know or have involvement with, but I hate what they stand for and do. That being said, I think they're doing a good job right now. They're raising rates through the roof, compared to like recent rates. And they're doing so with an orderly decline in the stock market without everything completely falling apart. Now, are they hurting the economy? Sure. But we already know what happened right now. Let's be real. I mean, shit hit the fan. We overdosed on, monetary and fiscal stimulus. And the firefighters showed up with the Narcan. And, they're giving you like the mouth-to-mouth, slamming you with like Narcan shots, whatever else they do to you, giving you some adrenaline, smacking you across the face, whatever it is they do to try to save your life when you overdose. That's what they were doing to the markets. So now that we're coming off of that high, now that we're back alive, but the overdose has happened, all they have to do is just try to keep us alive. Like there's going to be some rough stints along the way, but that's the Fed's goal. The Fed wants to slow down the economy. They want people to lose their jobs. They want, the unemployment rate to go up. They want the economy to slow. They want to cut demand. They want to give people less money to spend, even though they're already getting less stuff with the money they do spend because of inflation. Because they're saying, hey, this inflation really sucks. We have two choices. We can either just keep having shitty inflation forever and we just won't do anything about it and it'll probably just get worse. Or we know the inflation sucks. It's going to suck even worse when you lose your job or someone you live with lose your job or you lose that pricing power or whatever. But we can at least stop inflation from being something that we have to deal with permanently. So that's what they're saying. They're saying, hey, stuff sucks right now. We know we're not responsible, or maybe we are a little bit. But it's either going to get worse or it can get worse, but eventually get better. That's essentially what they're getting at right now. So, I think the market's starting to digest that. We don't know. This doesn't mean the market's not just going to rally tomorrow and just say, F it, now we're bullish. But the fact of the matter is, I think it's becoming more and more clear. And today was sort of like that breaking point at the meeting where people realize, oh, wait, the Fed is serious. We just broke out on the Fed funds rate, new high after, 35-year downtrend of lower highs and lower lows. Shit just changed. And this is it. You can't lie anymore and say, lie to yourself, lie to other people, and say that we didn't just break out of a 40-year trend. I mean, this is a big fucking deal. It is a big, big deal. So I think the market's just digesting it. And we'll see how the next couple of days go. But obviously at this point in time, the monthly close is extremely, extremely important. The markets need to rally their ass off for the next, whatever it is, week or so to have a nice monthly close, or they're going to look like total shit. And they're already really close to having gross daily closes, very close to gross weekly closes. And the truth is, if everything just closed right now and it was the end of the daily, weekly, and monthly, they would all just be absolutely disgusting across the board on every market. So the truth is, the bears have to do nothing, and they're in complete control, just completely decimating price action markets. Bulls are just dead and non-existent right now. So the bulls have to show up, take control, and rally back up to those key levels we talked about, or else we're still bearish. So we're bearish in every situation unless the bulls step in, take control, and reclaim these key areas. So there might be pockets of a couple, hour candles or, 4-hour candles or a couple daily candles that might look okay. We might see something or hear some news that looks okay. But the fact of the matter is, the bulls are fucked right now. It's up to them to unfuck themselves, to unfuck these markets. And if they don't, we are going to go much, much lower. The situation we've been talking about now for over a year, talking about the bear cross on the monthly time frame for our major indexes. First we were talking about it with crypto, and then it happened, and crypto's been getting decimated since then. Now we're talking about it we've been talking about it with the NASDAQ and the Russell. They've been kind of holding up okay, but now the Dow Jones has crossed. The S&P is very close to crossing. The dollar and TNX have broken out. They're at new cycle highs, continually making new highs. Gold is breaking down from support. I mean, there's no denying right now that as long as DXY and TNX stay strong, as long as there's still a bunch of inflation, as long as there's still so much uncertainty going on around the world, that it's going to be very, very difficult for assets to go higher, risk-on assets. And if they do go higher, they're probably not going to stay high for long. It's probably going to be a pump and dump or liquidity grab or something to that effect. So in my opinion right now, you should be positioned with the trend, and the trend now is to the downside on the daily and weekly and basically on the monthly timeframes as well. So that's it for today. I appreciate everybody tuning in. It was nice doing a super sweet short stream under an hour. I mean, that's phenomenal. I'll have to do this more often. So we'll definitely be doing it on Friday. So we got our Friday, 11 a.m. Eastern Standard Time stream. And then every Sunday and Wednesday from 8 p.m. till, 9, 10, 11, sometimes the next day. Depends how crazy it gets. So, but as far as I'm concerned right now, we saw a little weakness at the end of the day on the daily for TNX. Doesn't change anything. Still a powerful uptrend. DXY as well. There's plenty of stuff that needs to happen before DXY and TNX reverse, and we can start saying, hey, they probably are topping out, at least for now. Tons needs to happen before that, the same way that tons needs to happen before we can start calling out bottoms on any of these risk-on assets. And I think the list of stocks and cryptos that are already making new lows right now, that list is going to be 5 or 10 times the size by, a week from now, if we continue in this route. Only a few things are making new lows right now. We're very close to probably everything making new lows very soon. So appreciate you stopping by. Call me Betty. Great show as usual. Thanks. Yep, definitely appreciate everybody showing up today. Everybody have a wonderful night. Going to go ahead and wrap it up there. As always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. It is Wednesday, 9:21 p.m. No, sorry. It is Wednesday, 9:01 p.m. on 9/21/2022. I am, of course, Crypto Trend Trader, and I am getting out of here. Everybody have a wonderful night. Hopefully you guys enjoyed the stream today. Appreciate everybody tuning in, and let's see how these markets develop for the rest of the week. I'll see you guys all bright and early. Well, depending where you live, 11 a.m. Eastern Standard Time on Friday for our weekly market wrap-up. Crypto Trend Trader, and I'm out of here.